What's going on, everybody? Thank you so much for checking in. In this video, we're going to go over SPY, which is the S&P 500 ETF, and we're also going to cover some other notable names on the market, such as Tesla, Apple, AMD, Nvidia, Meta, and Amazon. We're going to go over these charts on the macro and the micro time frame. That way we get an idea of what the overall picture is doing and what the day-to-day looks like. But before we jump into the charts and talk about price targets, we have to talk about some things that happened last week and some things that are happening this week that could potentially send markets higher or force them to pull back. The most important thing that happened last week was the release of the unemployment report, which showed that unemployment ticked up in the United States from 3.7 to 3.9%. This is the highest reading that we have seen in months, which goes to show that interest rates are starting to take their effect on the economy. Historically speaking, interest rates take between 16 and 24 months to start weighing down our economy and affecting our labor market, and this is a clear indication that that could be the start of that period. This week, we shift our focus to the Consumer Price Index, which is the CPI report. This will update us on inflation, and it will be watched closely. The CPI report has been a real market mover throughout the entire last 12 months. Every time that the CPI report has been released, markets either gap up or they gap down, so this is a very important number to look at. Last month's CPI reading came in around 3%, which is moving closer to the Federal Reserve's target of 2%. However, this month's CPI is expected to move up to 4%, which is obviously moving in the wrong direction. Last week, we saw the Federal Reserve Chairman Jerome Powell state multiple times that the Federal Reserve needs to see inflation cooling down further before they begin cutting interest rates. And the fact that the CPI is expected to come in at 4% this month is a clear indication that there will not be any interest rate cuts in the next FOMC meeting, which is expected to happen 2 weeks from now. Now that we've talked about all the economic front, let's go ahead and move into our charts and see what we can expect from the markets for this week. SPY in specific reached a high of around 518.22 last week before seeing a dramatic pullback, but even through the pullback, you can see that the general trend of the market is still bullish. We are noting a little bit stronger than usual selling volume on that pullback, so we are approaching this week with a little bit more caution. Now, if you've watched our videos over the last several months, you know that we have been using these two lines as guidance when it comes to our bullish trend, and SPY closed above the 10 and 20-day moving averages last week, so that means on the general picture, we are still bullish on the market. Ever since we broke back above these lines in November of last year, we have been using them over and over again as support guidance, bouncing back every time we've tested them to new all-time highs. The story doesn't change this week. The first thing we're going to look at every day and the last thing we're going to look at every day on the daily time frame is where the daily candle closed in relation to these lines. As long as we're above them, we're still strongly bullish. If we close above them at some point, then we will turn a little bit more bearish. But if you don't want to just look at the daily time frame and you want to focus on the day-to-day picture, let's go ahead and talk about some levels for SPY. We've already stated that 518.22 is going to be a major resistance for us because this was the point that we got rejected at very strongly. Buyers are not so much in control now that we have seen such strong downside volume. They'll need to get back above 1455 at least in order to maintain control and potentially break us out higher in the middle of the week. To the downside, we have a support at 507.70 and another support at 504.40. If SPY breaks below 504.40, it could be in trouble because there's not much support below that level and there's a major gap fill that can take us down below 500. Now let's move on to the next stock on our watch list, which is going to be Tesla. Tesla on the daily time frame clearly indicates a lot of bearish pressure. Unlike SPY, which is trading above all of its healthy moving averages, Tesla is trading below all those levels, which means that there's a lot of bearish pressure on this stock. And if markets as a general whole start to pull back now, Tesla is going to be one of the quickest decliners to the downside. We actually just released a full analysis on Tesla. We're going to leave the link in the description if you aren't interested in seeing that. We talk about its fundamentals and some future price targets we see for the next quarter. But for now, let's focus on Tesla's short-term time frames and talk about it on the daily time frame and the hourly time frame. On the daily time frame, we already mentioned that it's trading below all of its healthy moving averages. It looks like it's creating what could be a bearish flag and setting up for more downside action. If you are looking to play the downside action, we are bearish on Tesla as long as it remains below 184. So that means a put or a short position could work below 184 and place a stop loss just above that level. To the downside, we see a support on Tesla at 164.50. Below that point, another at 152, and unfortunately below that level for buyers, there's not much support till around 100. Now, of course, these are aggressive downside price targets. We don't expect Tesla to hit any of these this week, at least not below 152. So make sure you're checking back into our future videos. That way we can continue updating on the levels we expect it to move to. The next stock on our watch list is going to be Apple, which, like Tesla, and very ironically, Apple is also one of the most bearish stocks on the market right now, and that could be because of their declining sales. Now, Apple is also trading below all of its healthy moving averages, and it's starting to move down at a point in which the rest of the market is starting to feel a little uncertain. And so if the market starts to move down or correct now, Apple, just like Tesla, will also be one of the quickest downside movers that we see on the market. Apple attempted a rally on Friday. However, you can see that bears stepped in strongly and forced it to close down, creating this bearish flag and potentially forming a bearish pattern to move down south. Here are some levels to focus on for Apple. If you are bearish on the stock is completely bearish below 173.70, but it has two supports coming up at 167.90 and 165. 165, as you can see here, is a very strong support. This was the point of a major reversal for Apple. And so if we break below that level, we can expect Apple to nearly free fall. And free falling Apple usually influences the rest of the market. So if Apple below 165 begins to sell off, the rest of the market is likely to follow. The next stock on our watch list is going to be AMD, which, like many stocks on Friday, was having an excellent start to their day, but ended the day with severe selling volume and broke the overnight trend with very strong selling momentum. For AMD in specific, here are some levels that we're focused on the short-term time frame. AMD's highest point before getting rejected was 227.30, which is also its all-time highs. Buyers are going to need a break above that in order to continue their upside move. However, we do not see that move happening this week. AMD is likely going to need to go into a multi-week consolidation, which is likely going to be the case for the rest of the market. That consolidation is likely going to lead us into the FOMC, which is happening 2 weeks from now. Make sure you guys are checking back in because we're going to be updating all these levels before that point. To the downside, AMD has a support at 198.50. We won't be really bearish on AMD until it breaks below 182.80. This is a multi-month consolidation period that AMD held, and so buyers are not going to be too happy if it breaks below that level, and that's when we would consider shorting or playing puts on the stock overnight. We are open to shorting and playing puts on the stock from a day-to-day perspective, but for us to really hold puts overnight, AMD will need to be below 182.80. The next stock on our watch list is going to be Nvidia, which is perhaps the strongest stock on the market right now, but that didn't appear to be the case on Friday, which you can clearly see the selling volume on Nvidia has been the strongest volume that we have seen in months ever since August of last year. Nvidia also formed what is known to be a bearish engulfing pattern, which is clearly a bearish pattern that could lead Nvidia to further downside in the coming weeks. Now, we have been very bullish on Nvidia. We have expected the stock to move towards 1,000, and it has gotten very close, but there was bound to be one strong shakeout before Nvidia finally reached that level. Are we turning fully bearish on Nvidia? Absolutely not. This is just a strong pullback in a major uptrend. We are still focused on Nvidia's upside, but for now, we are playing cautiously, and we are expecting some consolidation out of Nvidia. If you are interested in a full Nvidia and AMD analysis, we will also leave a description in the bio. We just released that video last week, and it is completely worth watching if you are invested or looking to invest in these stocks. However, if you are looking at the short term, obviously the main resistance in focus is going to be 974. This is the highest point that Nvidia reached before pulling back, which means that that's going to be the breakout point. For now, bulls are still definitely in charge because they are holding Nvidia above the 10 and 20-day moving averages, but we are expecting that cool down period to range us between 770 and 901, which is a very large range for Nvidia, so keep that in mind as you're positioning yourself. We wouldn't turn bearish on Nvidia unless it breaks below 770. That's when we would start considering shorting or playing puts on the stock. The next stock on our watch list is going to be Meta. Meta didn't flinch much last week. Yes, it was starting to have a very good day on Friday before pulling back, but you can see that it's still closed near their all-time highs and they're still very strongly above the 10 and 20-day moving averages. and they are still feeding off that strong earnings report that they had. Now, Meta on the short term has a resistance at 523.57. That's the level it needs to break above in order for it to continue towards 530 to 540. To the downside, you can clearly see there are a lot of supports. We don't have any red zone for Meta, and that's just primarily because the stock is so strong right now. This is not really a stock that we would bet against, at least not as of now, unless we start seeing more bearish volume. The last and final stock on our watch list is also going to be a strong stock like Meta, also holding above the 10 and 20, and also feeding off their last earnings report release. If you are looking at Amazon on the shorter term time frame, the main resistance and focus is going to be 180.15. That's the level that buyers need to break above in order for it to continue towards 183 to 184 as our price target. And to the downside, we have a support at 170, 175. It also has a gap down to fill, and the next support after that is going to be 167 or 165. So thank you guys so much for checking in. That's all we have for you guys. Make sure you subscribe and like, and best of luck this week.